Right now, we're looking at performance of markets. Now, when I say to you bear markets and bull markets and bear markets, some of you will know what I'm talking about. Some of you will have an idea of the two there. So remember, it's all about how markets are performing. So bear markets, looking at markets that are maybe slowing down, not growing so well, and caution is the name of the game. We've also got bull markets, which is the opposite, all about optimism, all about growing, all about moving forward. But the question is, which one do you invest in? How do you fundraise in those, and how do you move forward? After this session, hopefully, you'll have a better idea of exactly how to do that. Ladies and gentlemen, please welcome to the stage all our panelists and our moderator as well. Please welcome Project and Marketing Advisor at Banksters.com, Alexandru Carbunariu. We also have Portfolio Manager at from Altana Wealth, Roland Roventa. We also, when I say your name, please come onto the stage. That's right. It's your name, it's your seat, it's for you. Right, we move on. We also have co-founder and CEO at Stailer, Bogdan Clipici, founder and CEO at Sense for Fit, Mr. Antonio Enache, and co-founder of Hypercent, Andrei, Popa, and the man who's going to moderate this panel certainly the right way forward. Please welcome founder at Meta Studio, Mr. Mugur, Frunzetti. I'm just going to ask you, are you filling in this thing here? Okay.
Hello everyone. And let's go straight into. So what changed? We had a bull market, now we have a bear market. Maybe the bear has stopped for a while. But let's start with the question, what changed when the bear market came last year?
People lost confidence. We are here to grab the confidence back. A lot of people lost confidence in us, the crypto owners, the ones that build projects, because some of us did not do the job right. So, of course, the financial situation is something to look in, but at the end of the day, we need to grab that confidence back, and it is our responsibility and morality to do that. This is just my opinion.
Okay, so during bear market, traditional funding sources like venture capital firms and business angels may be less willing to take risks. However, if you are startup founder or CEO and you want to raise an investment round, you should take into account the following. First of all, cut the unnecessary expenses. For example, as a good practice, you can lay off your bottom 20% of your workforce, and in addition, if it's possible, reach your break-even point. Second, increase your MRR, your monthly recurring revenue. Third, know exactly how much runway you still have, and be sure that you will have enough runway until the end of 2023. So reduce your burn rate as much as possible. Fourth, monitoring your cash flow. Fifth, stay in contact with your investors. They need to know that their investment is safe. So you have to be in control of your startup. And as a bonus, take care of your mental health. Be ready to increase your resilience, and it will be very, very challenging to raise money as a startup in 2023. So good luck to the founders.
Yeah, so from my perspective, if you're building a company right now in the blockchain space, you have far more opportunity because each blockchain has its own cycle. So you can look at, for example, where your company fits. If Solana doesn't have something similar to what you're building, you can use that to leverage to your advantage and build there, because you're going to have a market that wants, even in a bear market. It worked for us building Ankadina. we managed to raise about 2 million in a bear market because we have built where there was a necessity. So if there's a demand, you can supply it. You know, there are a lot more opportunities from that perspective.
The points made are very, very good. In a bull market, there's lots of noise. Everyone wants a little piece of this crypto thing that is everyone keeps on talking about. People are not taking the time to research what they're investing in. And this includes the retail audience, but also VCs invest at much larger valuations. In a bull market, you can potentially easily raise $5–10 million, while in a bear market, as we have seen, you need to make the quality connections, and you may also have a hard time even raising $1–2 million. The points made are very well that you have to cut costs as a startup. When people invest in a high-tech industry and a high-growth industry, they don't think about the runways, they don't think about what they're buying, but there are many protocols within crypto which only have runways of less than 1 year. So they need additional capital, or they need to sell their tokens unless anything else happens. Otherwise, they will not have capital to continue their operations. It is a different mindset to invest in a bull market versus a bear market. Here you have to take it slow, you have to take time and see what you're investing in, because the odds of you losing money are much larger than in the bull market. In the bull market, everything goes great, but I believe that now is the period to actually make a considerable change in your investments. Most of the money is made in bear markets because the investments you make now will be the ones in which you will reap the rewards for in the next 2–3 years.
Hi, so I think in my opinion is the best thing that happened for us because all of us, I think we invested in too much companies that didn't make almost nothing in the bull market. So, you know, in bull, it's the marriage. You know, we see everything is flower power and, you know, money fly and people raise too easier the money. So that's a big problem for me because I'm an entrepreneur for the last 16 years. I was scared to invest in the bull market because I didn't know who really will deliver it. So when we started Sense for Fit, we started to raise money, but at the beginning of the bull market. So everybody was scared. Even we changed the tokenomics 4 times because, you know, it was not the same business anymore in the crypto. So we realized, you know, you cannot go to your investors without an MVP, without a strong core team. If you go just with a white paper and a good pitch deck in our days, you are done. You know, you cannot do nothing. So it's not just about the idea, but it's about what you can do with the idea, but show me your idea can work and have a proof of work. Do enough due diligence by your own side if people will buy your product, not stay with your friends on a wine and say, I think we're gonna smash it, you know, and we're gonna raise $3–4 million. That was in bull market. And for us was bad if you're investors. If you're a founder, you cannot think about this anymore in the bear market. So that is good for the mass of people. Because, you know, I think we better stay with just 10% of the companies from the crypto space, but stay with good projects. Because, you know, even now, people look different to crypto. Why? Because, you know, we see on the legs just companies that really build something. They do customer acquisition, they build, you know, they didn't stop. So it's funny because we paid a lot of people, you know, we invest in a lot of companies during the bull market, and I don't know why now in bear market they are not building anymore. So what's happened? So when we see a company that in bear market, they build since the beginning, they build and they say we need money to build more, I think that's the value proposition and that's the way things need to be.
Yeah, please.
Yeah, like Antonio said, congratulations, you're absolutely right. The era where you have a cute website with a crazy idea, raising $10 million in 2 hours, it's over. Now you have to push for your product. You need to show your audience, your possible contributors, that your product is, you know, the one to invest in, to give them a chance to invest in your product. So the era, for all of the crypto owners out there that want to launch a project tomorrow with a cute website, that era is over. A new era of crypto projects is in when they invest a lot of money in their product, they A/B test it a lot, they create focus groups, and then they create a community. And only if the community likes your product, they can go ahead and invest it. But I'm gonna check the question one more time. How to invest and fundraise, right? So in the client's perspective, how to invest in a bear market or bull market, like Antonio said, try to look for projects that have an existing product and check the team. Check what that team has done in the past, what other projects they have been connected with, what products they have released in the past, let's say 4 years, not 2 months. So like a tip for the bear market investor is to thoroughly and detailed check the team before investing any dollar.
They're very good conclusions, both. I mean, I understood developing my own project, Meta Studio, that unless you have at least an MVP, a working product, and you have traction, people are using your product, better if they also pay for it something, so you can show revenue. You can't really go to investors and tell them, I have this amazing pitch deck, give me some money. That it's obviously gone. Now, you mentioned something very important. We have a problem of credibility in the market. It happened when people with no knowledge about the industry went with a hype, invested in projects that were actually dead as soon as the bear market started. Whether they were not valid or they just scams, let's not go into this. We have another panel. How can we restore confidence to the small investors? Because VCs and everybody like hedge funds, they know how to adapt now. We don't need to teach them. How to restore confidence to small investors? Where would they buy from? What would they invest? Are there launchpads that create more trust for them and make them more safely against pull the rug projects? Give them the best advices so they come back. Because once they lost money and they lost enough with all the shitcoins in the world, it's very hard for them now to have the trust to come back and invest so we can have another cycle of a bull market.
So from my perspective, I think that the first thing they need to learn is when a crypto project is dead. Because it might look dead, strategically it might look dead, because most of the projects they're building, but they don't want to share it, because strategically it's not the smartest time to share what you're building. Nobody cares. Some people care, but very few. So you're wasting bullets, you're shooting blanks, you know. So maybe some companies look dead. But as long as their founders are active and they're actively speaking about building, I think they should look for that instead of trying to play bull games in the bear market with announcements and stuff like that. They don't work. So yeah, some companies make compromises. For example, now they make like staking with crazy APIs and stuff like that. I would personally stay away from anybody who's feeling the pressure of the bear market to make compromises with their tokens and stuff like that.
I started my journey in crypto in 2016, and the company I work for launched the first crypto fund in Europe in 2014. So I've seen a bit of cycles going up and down, and things which we are accustomed to. In terms of advice, I would say that you should at least know what you're investing in and know the amount of risk that you're taking. Investing in digital assets is risky, and if you're not a professional, you have a high chance to potentially lose your money. You can also make a lot of money, and you should, for example, Bitcoin and Ethereum are the two assets which could be considered safe in this ecosystem, and anything else that is not Bitcoin and Ethereum, you should have a smaller exposure to if you're a rational investor and will not want to lose that money. You should always think about creating an exposure in Bitcoin and Ethereum, in my opinion, and then look at other assets that you want to invest in, because the risk of investing in Bitcoin and Ethereum is significantly smaller, and an investment makes sense with a 10, 20, 30-year horizon. In digital, in the whole ecosystem, you have tokens which come and go. Every single 3-4 years, you have new names, new tokens, and it is often more profitable to invest in what is new instead of investing in an idea that is old, which has already peaked, and it's no longer relevant for the next expansionary phase.
So in my opinion, it's nothing different from a Web 2 company. So when you build in Web 3, it's the same. You do customer acquisition, you know, when you do the marketing, you need to be real, you need to be backed of something that really proves, you know, the reality. So people don't buy the hype anymore. You know, it's, you know, when I didn't work with any influencer in the last, you know, months, because, you know, nothing worked and we don't need that in our company. So we better stay in our office with our team and build, and, you know, smart people will understand, smart investors will understand. Just look at, I don't know, at Tesla or other big companies. they don't care to create it. They create the hype at the beginning when it was the hype, right? You know, even in the bull for Web 2, Tesla made the hype, right? Now they go like 80% down, but they don't care, they still build. It's a good investment to go in Tesla? Yes. It's a good investment to go in Bitcoin? Yes. It's a good investment to go in crypto? Yes. But who really built? If Tesla was just talking, it was one point, but they are building every single day. So I think we can regain the trust of the investors and small investors if you really make small steps, but track the progress and show them, look, that's the new update. That's the new update. Another 2 weeks, that's the new update with what we built. And every single week, every single month, we can really prove for the communities what we do. So what we tried now, because for example, my company, we're working on several verticals, and we really make things happen, but because we started to promote all the things we are doing in the same time, even, people didn't believe us, but we showed this is real, look at this is real, but, it's not the same. So now we choose one thing, and we track the progress every single week, and we prove every single day, that's the way we are building, and that's the product. You can touch him, you can use him, we do customer acquisition every single day, and the marketing come organic. No, we didn't need to do any other flower power in order to attract people. And even, about this, I think, in my opinion, an investor that asks, what's the price now, where you are on the market, how much volume do you have today? I think it's not a good question anymore, because you need to ask what you delivered yesterday, what you are doing now with your team. Because, in the bull, yes, you're going to generate volume, but even the volume need to be backed by your real business from the customer acquisition. And the question when you have a token, and even an NFT, it's how much money from fiat you are bringing from the marketplace with the value that you increase in your project and bringing in your token. So, it's a cycle, right? And that's the question. It's not just putting the money from the pocket of the investor in the exchange, but how the money from the fiat, from your customer coming into your token and in your NFTs and so on in your ecosystem. And I think that's building the trust, and it's just about time for a company. And even for a company, I think it can take 2 years. A startup can take 2 years now to really see some big things. In my opinion, even like the company that I built, I have the time to stay here, to don't see any volume and any price increasing for the next 2 years, and I don't care about the price. Why? Because I want to build the products. I want to build the verticals to have a real business. So the problem because that's the idea about fundraising, right? So the problem in crypto is we fundraise a company without having the product. But in Web2 companies, you need to go with more than an MVP, with a real business when you fundraise a company, right? So just imagine when you go to be listed even in Bucharest Stock Exchange, right? It's crazy, you need to have a real company there in the back. So what we do is really list our shares, but on the exchanges, on checks and DEX, and in my opinion, it's the same, right? You sell them your equity, and doesn't matter. But you didn't have nothing, and you need to have 2-3 years to build like a startup. So sometimes people, even the customers, wait, why you don't have 2, 3, 4 weeks? And my question is, for what? For what? You don't have time to build your business in 2-3 months or weeks or even years sometimes. You need 4 years to really have a mature business. So I think we need to do enough due diligence to see if they are builders, if they want to use their product, is good. If they want to invest in their product, is good. And even in my company, when I made the first pitch to somebody to invest in my company, I need to have the confidence that I will put $500 million in my own business. If you don't have your own confidence to put your money, your personal money in your own business, don't go to others to take money. But first, put your money in the game. If you're an investor, ask the investors, you put your own money in your business? If they say no, you need to put a question if things will happen. Because even sometimes, we don't believe our business will go enough put our $500,000 debt, right? Or 1 million, or I don't know, maybe all the money from the bank.
Yeah. Sorry. Long story short, there are two important points here. First, you have to take care of your current investors. Talk to them regularly, maybe a weekly meeting, and you can send your updates. And the second point here, if you want to raise money, or if you want to increase your credibility in the marketplace, you have to be more stable. The new sexy is not growth, hyper growth at any cost. It's stability and sustainability. So these are two important aspects. First, if you want to take care of your investors, take care of them, because it's so important. They invested maybe 1 year ago, 2 years ago in your startup, and you have to prove that your startup is going to success. And second, be sustainable, and if it's possible, as I said before, reduce your burn rate, reach your break-even point, and focus on your monthly recurring revenue, and try to increase month after month your MRR.
Yeah. So scrolling back to your initial question, on the investor's perspective, yes, launchpads provide a confidence, security. It gives you a little bit more hope that you will not be rug pulled or scammed. In our days, for a project, now let me finish with the investor part. So yeah, if I would like to invest in a project, I would do it through a launchpad, right? So 100%. Of course, you can do the fundraising on your own website, but people got scammed too much, it doesn't work.
Sorry, does the launchpad exclude the possibility that I'm being scammed?
Sorry?
If I invest through a launchpad, am I safe? Am I sure it's not going to be a scam?
You're not 100% safe, of course not.
But
However, it gives you a little bit more confidence and more, let's say, safety nets that you would like go into the sale that is happening on that project's website, right? So for the investor, yeah, the launchpad is the right way at the moment. Now, a few people don't know this, but the ratio of getting to the launchpad is actually harder than getting a VC on. I work with HeritySeed.io, and I'm going to tell you, they are excluding 95% of the projects because they do not show confidence, they are not legal, they don't have a business plan, they don't have a plan at all, and these launchpads do the same. They are filtering people and filtering projects out, therefore giving you only the cream and leave the milk out. So to answer your question, yes, it's good for an investor, a normal guy, to invest through a launchpad, but also it helps the project as well, even though it's harder to get there, right? But it gives you more confidence. It gives you a lot more community. You're gonna save up on marketing on the long term. And nowadays, launchpads will ask you for a certain amount of funds to invest in marketing. Therefore, they want to make sure that the project that you're going to launch on will be exposed.
Also, as a launchpad co-founder, let's say, we always KYC people we launch, so they can't run. So the only thing you have to defend your users from is incompetence, because as a launchpad, your product is to basically put good products in front of the people, because if you make them lose money, they're gone, and you can launch whatever you want, the next Binance, they won't be there for you. So you gotta make sure they get into good things, you know. So game theory wise, yeah, it's better to go to a launchpad.
Yeah, of course, and this again, scrolling back to the beginning, we need to give people confidence and be transparent, and to have that morality. At first, what was it, Mr. McAvoy? 2 years ago, people were asking us, when are you going to list on Binance? That's a load of crap. You should never tell anyone that you're going to list on Binance. The chances of your project getting there is 1 to 10,000, period. And you should educate your people and show them, okay, we will not go there. We might go on other exchanges, but maybe in 2, 3, 5, 10 years, maybe, but not now. So transparency brings you a lot of trust, in my opinion.
Okay, so to summarize it, try using launchpads Maybe look at what they launched in the past and see if the last 10 launches are success or failures, because that will tell you how well they do their due diligence. Look on who you invest in. I mean, I would advise, if you want to invest the community, Telegram groups, whatever they have, and ask them direct questions. They did a test myself. I went and asked, who are you, the founder? What have you done in your life until now? Which is the company you have? Are you the owner of that company? Do you have any regulation in the country? And to be honest, 90% of time I was kicked out of the channel when I started asking these questions. And the last one, see if they really have a product. Can you use their product? Do you enjoy using their product? Will other people use it? You know, those are the 3 things I will look into. And of course, don't listen to the hype, because yeah, whatever goes up very fast is always gonna go down fast enough, most cases.
Yeah, and as you said, Mugur, very important KYC, because down the line, if you fundraise, someone will ask you, where did you get the money from? From whom? From Antonio, from who? From Mugur, right? So you need to have KYC. It's impossible for you as a project to evolve and to grow without being 100% legal, because otherwise your funds will be most probably seized, and whoever does not have a legal entity backing your project is probably a scam.
Okay, now let's take questions, everyone. Shoot.
Here on the left.
The hardest question, please.
Hello. How many questions am I allowed to put? Only one question. Okay. Then it's going to be the one that I'm more interested in. So, Antonio, you said that you would invest in a project that during bear market they built and existed. Is your statement still true? If proven this way, may we pitch you some of the projects we have, we existed and we still exist during bear market?
So yes, I'm an investor, but at the same time, I'm the founder and the CEO of Search for Fit. So number one, I invest in my company, and I still invest in my company. So that's because this is my passion and this is what I build every single day. But at the same time, I want to invest my assets in several companies I really build. So for sure, I think all of us, we need to be open to really see the builders. And you know, because we start to talk a lot about the launchpad. In my opinion, the best time now to invest is not when you see a project that they are on the launchpad, but even wait another 4 months after they are listed and just wait. Because you know, for some of them, even they are crazy good, you're gonna take with better price that launchpad, because you know, everybody know how people go to a launchpad. 90% of the people, even you run a launchpad, they're gamblers. They want to have a fast 2x, and doesn't matter. You know, nobody can sell me the idea of my launchpad is the most quality. I have the best quality investor. No, you will have a venture capital with a lot of pedigree there, right? But the launchpad, you know, we have people that really are gamblers. 90%. They sell a lot. If they see 1.5x, they're gonna invest in Bitcoin and our days.
I think
so. We better wait. That's my opinion. We better wait, you know, to stable the market, stable the token, and wait and buy with better price, and really see what they do.
I think that
because at the beginning, everybody talk good, right? Before the launch,
it's easy maths. If you can sell to less people that want to buy, your token will do good. So if 5,000 people want to buy and you don't allow all 5,000 to buy, then it's safe. I think it's pure math. If you're going to have low maximum buys from lesser people, but still enough to be a mass, you know, and if there's three times more people on the sidelines waiting to get it, it's going to get, you know, hot on the secondary markets. If you don't launch projects that have sold the token in private sales for 10 times cheaper or 3 times cheaper, the token is going to do well. So it's all pure mathematics, man. And even though those people are gamblers, if you, as a launchpad, if you do your math right, you're going to launch great stuff, you know. But what happens now is that people sell like a big percentage of tokens in private cheaply, and then a very small percentage in public for like 10 times the price.
Right.
The private tokens are locked, and they use the money from the private tokens to make the hell out of the public tokens, which are on the market, which are 1%. And they create unrealized gains for the private people.
I'm just going to, only because we've just got another question. I'm sure this conversation could go on all day. I'm sure it will, but we have another question here on the right.
Hello? Hi. Well, first of all, thank you for being here and thank you for giving us this amazing panel talk. My question to you guys is, do you believe that as a founder of a crypto project, there is any rationality in fundraising while the market is not doing good or while the general investor public doesn't have much confidence in the crypto markets?
Whoever launches a project in the bear market has a lot of courage. And if you know how, I wouldn't say if you know how to sell it, if you're giving the audience what they need, meaning a good product, like all of the guys have here, by the way, very intelligent people in this panel. So if you're giving them what they want, I'm pretty sure you'll do just great. The same way as you will do in a bull market. I will not name a project that will launch in less than 5 days, and it will be in the top 5 CMC. Hopefully you know what I'm talking about. If you're connected to the crypto market, that project will do the same amount of money in bull or bear. Why? Because they spent over 2.5, 3 years to proving their network, to proving their blockchain, and now they're gonna rule probably the world. After Ethereum, of course. So to give my personal answer, yes, people do invest in bear market. They're very hard to find. But if you have a good project, if you're transparent, if you know how to, let's say, prove your product as a utility in the real world and crypto world, you're gonna do just fine.
Thank you. And also, I want to add something. It's also a good moment because there is less noise. So if you really want to look into the market and find project, it's much easier now because there's not the usual noise of the bull.
Also, look for demand. So for example, you can look for the Uniswap of Solana, the Uniswap of Cadena. The opportunity is huge right now because there are tens of ecosystems. You can find anything anywhere right now. Whereas in the past you had to wait for Bitcoin to go and then large caps, medium caps, small caps, ICOs. Now it's just there. Everything is the cycles. Each blockchain has its own cycle. So whilst people maybe they're not raising on Solana anymore, somewhere else there's a hyped blockchain that still is possible to raise and build there.
We have time for one more question.
Just here.
Yeah, so my question is basically, why are we only talking about investing through coins? Like, investing would be done through VCs and other stuff, and like, you're only talking about investing through coins, and that's really not the only way to invest in bear market or bull markets. Like, probably the best way to do it in the current state is to go to a VC and have a solid idea and get the money there. What's your opinion on it?
I'm not sure I understood the question. So
Why are we talking about investing just to buying and selling tokens and we're not thinking about equity? That's what you're telling me. Okay. I would say that this is, we were talking about general public, which usually invests in token. If we talk about equity, then you go to a very regulated market. It's not going to be easy to list your company on a stock exchange, so you can actually make a public release. But yeah, how about VCs and equity? Do they prefer equity to tokens today?
This is a very good question, and a lot of people are, actually a lot of projects are selling some of their equity right now, or giving the equity towards their community through their tokens or NFTs. And I think this is the future. You can onboard someone on your business, give them equity, and they will grab a piece of the pie, a piece of the profits. But with VCs, to give you an answer, I think half of the room here will go with VCs. They'll be comfortable knowing that VCs are backing a certain project. Half of the room here, I think they will say, oh, maybe VCs will have more power on your product, and you will do what they will ask you. So I'm not taking favors. I'm 50-50, but I'm pretty sure that half of the room here will go one side and half the other side.
Yeah, so I have mixed feelings here, but I totally agree with you because The issue is, when you have a company and you really sell your skin for money. So if you believe enough in your idea, you just need to understand, if you really sell your skin for money, all the investors and all the VCs will put enough pressure to put their mindset in your mind, and all your ideas and all your company will not go forward with the basic idea. So that, I think it's, even on the financial books, we have this in the investment strategies. 80% of the companies, they don't go forward with the main idea because the VCs change their main focus. And you better stay with your same shoes for 3 years, and don't change your shoes, but go forward with your dreams and be passionate and really build what you started.
Again, follow demand. If there's demand for a product somewhere, it's going to be easier to convince thousands of people who believe in that certain platform, blockchain, whatever it is, that you can supply that demand and raise and build. It's easier to do that than talk to VCs from my perspective, because
I want to thank every one of the panelists now for their contribution. Thank you very much. Thank you for listening to us.